Hey, breathing again. Some gon' leave like trees in the wind. Well, y'all gon' see like B to begin. That BC days, y'all free to pretend. Hey, cap on the internet, rap, we ain't into that. Fact, I'ma interject crazy. Hey, whack, I'ma intercept that with the intellect. Chat, better give me that gravy. Hey, that mean chicken. Gotta blow that, get it back, never know the cause. Yak, get the black, and a few stacks, never gon' lack any cobras, dog. Hey, I don't got a cross for the NBA. I seen Tobin, the all white promo vid. And if God be for me, I ain't got a mind to against me. Hey, shoot the shot like I'm Curry. Ooh, I don't cap for my pitches. Ooh, narrow way, but I'm sturdy. Yeah, I don't pass on the scriptures. Ayy, walk with him 4 seasons. Never going back is no reason. Devil trying to tag you, throw demons. I don't never lack, I'm pro defense. Double check y'all Twitter feeds. It's a whole lot of big cap, like a biz hat, no ministry. You're the wall fall like winter leaves. And if you don't got Christ in the middle with the bread like a centerpiece, you'll probably gotta retool. No sheep food, so hard for the inner piece. All cap like Captain America. Cap Satan and capture the area. Cap Crunch, Cap Marvel.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What's good, baby? It's your partner looking oh so fresh. Cook. You see that thing? Relax. I know I look better than you. Just take that damn picture for your mom and them. Now, guys, and welcome to another edition of the Real Estate Friday Training Live. We do it every Friday at 5 p.m. CST to be your partner. Today, Cliff's taking care of some family business, guys. It's all good, baby. Man, I hope you guys had a phenomenal week. If you could, while we begin this, share, like, and subscribe if you give me some value. And I think you're going to like this topic today, guys. And you know how we begin it every single week, guys. We always begin with the current market analysis. What's really going on with the marketplace, no matter what city that you're in. Each city has its own context and market. And so whatever city that you're in, this analysis is more of a general analysis from the nation. And we can get more point when it comes to the details if need be. In the comment section, just let us know, guys. I thought it'd be wise for us to bring in our guys from RE Consulting. They do a phenomenal job. And when it comes to looking at what's going on with the market, guys, we're going to see exactly what's going on, guys. And we're going to be talking about a specific area, guys, Georgia, Tennessee, South Carolina, and North Carolina, and talk about a 40% price cuts. Let's listen to what's going on, guys. Here we go.
So I'm up here in Atlanta, Georgia, escaping the hurricane in Florida. And some of the observations and things I've seen the last couple of days, everyone, I got to tell you about. We are seeing a rapid housing downturn now spread across the Southeast. It started in Florida, but now it's up here in Atlanta as well.
Notice how he said in Florida, because everybody was flocking to Florida from California and New York and these other states. And everybody was going to Florida and also Texas, specifically Austin, Texas. And what's happening is, specifically in Miami, the Miami area in Florida, that market has gotten highly inflated to the point to where the pricing is too high and the rental cost is too high. Now it's spreading up a little bit more to the more southeastern side, Georgia, Tennessee, South Carolina, North Carolina. And listen to these numbers, guys. Here we go.
And it's also spreading to Tennessee, South Carolina, and North Carolina. We're seeing the inventory of homes for sale spike and the prices go down. And these are trends that you guys need to be paying attention to as home buyers and investors.
Correct.
Because it's signaling a worsening housing downturn throughout the end of 2024 into 2025.
Listen to what he said, a worsening housing environment. Worsening. So again, no spin here, and he's going to bring the data to unpack this. Let's get to it.
A lot of people could be losing a lot of money on the houses in a city like Atlanta or a city like Nashville or Charleston, South Carolina, or anywhere in Florida right now. Because I'm actually going to start with Florida. As you guys know, another hurricane hit the state, and this is now causing a massive amount of panic selling in Florida. People keep sending me listings of sellers in Florida now cutting the price 100, 150 grand after these hurricanes. There's storm damage. They don't want to deal with it anymore.
This is the retail market, guys. Some investors too, but mainly the retail market. Listen to these numbers. This is Florida, guys, after the hurricane.
Now selling below asking price, below ARV,
Yeah.
and I think we could be seeing values in Florida potentially collapse in certain cities and neighborhoods over the next 6 months. Because there's just an exodus going on right now. A lot of people are leaving Florida. The Wall Street Journal keeps doing articles talking about how people are leaving Florida. The Great Migration is over. You know, a lot of the things I've been talking about on this channel, actually, the last 6 to 12 months.
Now, I would say I kind of disagree with the Great Migration. Again, I believe that's a marketing tool, because if you live in Florida, you understand you're kind of in Hurricane Valley there, right? And you kind of plan for that, because in Florida, what that normally happens is when you buy a property, you have to get homeowners insurance and also flood insurance, right? I used to own a home in Florida near the Palm Beach, Fort Lauderdale area. I would fly down there every year. It was a mansion, 3-story mansion, and we had insurance for the home and flood insurance, right? I mean, so if you are a veteran in Florida, of course, you don't like hurricanes, but you are aware of them. Hence, you actually having flood insurance, right? Here we go.
Are now finally getting the attention in the real estate mainstream. And the thing about Florida is that it's a very influential housing market and economy. As Florida goes, kind of the rest of the Southeast particularly, but the rest of America tends to go in this new economy in 2024 and 2025. Florida was growing the jobs. They were building the apartments. They were building the houses. They were attracting the people. And so now that Florida is heading down and prices are dropping in Florida, they're going to drop here as well in Atlanta. And if we look at data on RevenTrap, we can see that happening right now.
I can agree with him concerning some areas of the country, kind of piggybacking on Florida, so to speak. And it's primarily, I believe, it's because of the insurance costs. There's a lot of insurance companies don't like paying claims, even though they do. Insurance companies find ways how not to pay, right? And you can essentially insure anything in this world, anything. But still, I can agree a little bit when it comes to some states, when it comes to Florida, because of the context may be the exact same, i.e. being around a lot of water, therefore needing flood insurance. But if you go more interior, it may be different. But I can understand when it comes to the insurance cost, how that can kind of drive the decision making from the insurance companies and the retail buyers and sellers. But let's see what he's saying.
All throughout the middle of Atlanta, month over month home prices are in decline. We're seeing declines of anywhere from 0.5% to 1% month over month in Atlanta, seasonally adjusted. Meanwhile, the inventory levels across the Atlanta metro have gone up from 15,000 homes for sale to 23,000 homes for sale. Look at that inventory spike just over the last year. And so I want you guys to understand this if you live in the Sun Belt in particular. Is that we're entering a new housing market.
We are.
We're not in the pandemic anymore. There's now more people leaving the South to go along with a huge investor sell-off and a huge home building pipeline that continues to deliver new homes and apartments at a time when there's no one.
And again, when you said the investor pipeline, guys, investors, a lot of investors bought bad, right? In other words, investors will borrow hard money, which is not uncommon to build a property, which is great if you know how to negotiate. And so they bought wrong, didn't budget the correct way because the numbers were not accurate up front. And then what actually happened is when things got a little tougher, when the market actually shifted because you didn't plan for the worst case scenario, they now let the property go. And then of course, the lender takes that property. They can't liquidate the property because no one wants to buy a half built or a 3/4 built property itself. So they have to take a haircut. So again, that's why I say it's so essential, guys, for you to understand how to buy correctly. You make money in real estate when you actually acquire, not just when you sell. Because when you buy right, you sell right. Does that make sense? Let's keep going.
There to buy or rent them. Now, here's an example of a builder that messed up big time here in Atlanta. We're talking a 46% price cut, everyone, on this townhome behind me. You can see it's for sale. You can see actually that the city of Atlanta has issued a stop work order on this townhome. It was originally listed for $470,000 in 2022. It's a 3-bed, 3-bath, 2,500 square feet. Looks pretty nice on the inside. They've now cut it to $250,000.
Yes.
And you look at the pictures, you say, well, why did they cut the price? You read down here in the description, they say that the city of Atlanta has said no more work can be done on this property. You're not allowed to go into this property.
Wow.
They pulled the wrong permits. And this is actually a hard money loan foreclosure. The builder took out an expensive mortgage to build this property, and they couldn't sell it, and they built it improperly. And now they cut the price 46%. And we're actually in a neighborhood right here, everyone, that is one of the most dangerous in Atlanta, actually. I'm in a zip.
He said 46% price cut. And notice, the city is involved. And this is the reason why, guys, when it comes to this, we give away this free ebook. Is because typically what happens is when it comes to properties like that, what you're seeing, typically some lenders, when they foreclose on it because they can't liquidate it, they may stop taking care of the property. And then, of course, the grass gets high. The paint gets chipped. If you have a fence, the fence gets terrible. And what happens is the city then puts on a lien onto the property saying, hey, you got to get this cleaned up. But typically the investor and or lender, because they don't want to deal with the property anymore, don't do that at all. And so because a government lien, whether it be municipal, county, state, or federal, supersedes a lender's lien in the proper context, now the city now controls that property and their lien overtakes the lender's lien, so the lien position. Does that make some sense? Now what happens is in this free ebook, guys, it's free. It is free, guys. We talk about how you can get a list of these type of single family and also multifamily homes in your city, county, and or state. I will begin with your city, right? And it could be free or it may be at a little bit of a cost. And you can begin to reach out to said lender and said seller of these properties to negotiate the proper deal. This is the reason why Cliff and I give away this free ebook, right? It's free. It doesn't cost you a dime. Our philosophy is we can teach you how to locate these type of properties, right? Structure it the right way, negotiate it the right way. If the deal makes sense, right, we will actually fund the deal for you because we like deals too, and we can profit share. This is the reason why we say we're giving this information away. It's literally free. And you just saw an example of this type of home, although right now it is a little bit cleaner, that home. If this property doesn't move and you're in a more of a, as you said, more of a unsafe area in Atlanta, that property is going to become dilapidated. It's going to become uninhabitable, which it already is typically, right? It's going to become an eyesore for the community. Then the city steps in. The city's already there, guys. So again, guys, we do this, guys, so that you can get this free information. It is free. It didn't cost you a dime, but let's keep going, guys. He's cooking. Let's keep going.
Code 30314. This is one of the higher crime areas in Atlanta, and it's an area that actually boomed during the pandemic. A lot of the investors and the builders, they came to this neighborhood and they speculated on it. They pushed the prices up. You can see in the matter of 2 or 3 years, the typical value of a home here went from about $90,000 to $250,000. So the value's tripled in about 5 or 6 years. Of course, the incomes in this neighborhood didn't go up that much. The median household income here is only $34,000, according to data on Reventure app. So what I think is going to happen throughout the Southeast and the South is that many of these, let's just call it gentrifying neighborhoods, speculative neighborhoods that still have a long ways to go in terms of growth and development, and where the investors invaded, they have the potential to crash hard. And this is one of the primary things that's pushing inventory up across the South. So if we look at data here from Realtor.com, we can see the number of active listings in the South in America is now up to almost 500,000 homes, which is basically back to pre-pandemic level inventory. So think about that. In states like Florida, Georgia, Texas, South Carolina, North Carolina, Tennessee, we are now back to the levels of inventory before the pandemic. So now, folks, we have another builder that's now taking big losses, doing a big price.
Here's another builder
on this listing, also in 30134 in Atlanta, a bit of a nicer street though.
Sure.
The builder originally had this 3-bed, 2-bath listed at $485,000, and they've since cut it to $445,000. $40,000 price cut. This house, which looks pretty nice on the inside, folks. It's kind of a new build, modern chic interior, shotgun style house, still sitting on the market. Usually it's not a great sign if the realtor for sale sign is hanging off its hinges. Maybe the realtor should come and fix that.
That's a sign, guys, that that property's not being taken care of by even the listing realtor. Now, the house does look clean, but why hasn't it sold yet? Again, he talked about how the income of said borrowers has been outpaced by inflation. People don't have enough money to qualify for these loans, and the people's debt, they owe more in credit card debt than they actually have in savings. So the DTI, debt to income ratio, when they go apply for a mortgage, they can't qualify for a mortgage because the DTI is too high. I told everybody those two variables was going to determine how this market was going to go. And I leaned upon the DTI being too high and wages not outpacing inflation, and it's coming true. Yeah, we almost done. Here we go.
Such a good look. In many cases, we're seeing these builders drop the price, and then cause other houses in the neighborhood to also have to drop the price. In addition, the builders across the South are giving huge mortgage rate buydowns.
Huge.
Like I just got an email from Lennar about a house in Austin where they're doing a 3.99% mortgage rate on buying a house in Austin with a $40,000 price cut. The other thing we got to talk about, everyone, is mortgage rates. These mortgage rates are doing some crazy things. We're now here in mid-October, and the 30-year fixed mortgage rate has jumped back up to 6.6%. So the 30-year fixed went.
He said back up. I thought the Fed cut the rates. Y'all, look at the fruits of the market, not what someone tells you on TV, even on YouTube. Vet what I'm saying, right? But look at the fruits, the data, the facts. Here we go.
Down to 6% right around when the Fed cut rates. Now it's back up to 6.6%. This is confusing a lot of people. Why are the mortgage rates going back up after the Fed cut interest rates? And the answer has to do with the fact that the Fed doesn't really control mortgage rates. The Fed controls short-term interest rates. They influence the Fed funds rate. They influence the 3-month treasury, the 6-month treasury, maybe the 1-year treasury.
He cooking.
But the mortgage rate is actually a function of the 10-year treasury yield.
Yes, sir.
Of longer duration treasuries. And all that means, folks, is that it's a market-based price and interest rate.
Yes.
And so while there is somewhat of a correlation between Fed going into a cutting cycle and mortgage rates going down, it's not one for one. And if the market, and the bond market specifically, thinks that maybe inflation is going to rear its head again, or maybe that the Fed won't be able to cut as much in the future, you'll see that reflect itself in the long-term yields going back up, causing mortgage rates to go back up. And so my theory here is that maybe the bond market is pricing in heavier inflation expectations in the future. Maybe the fight against inflation isn't over. Nevertheless, you as a home buyer, if you want to buy a home like this, you're now back up to a 6.5, 6.6 mortgage rate. All right, everyone, I found you an even bigger price cut.
Listen, here goes some more, guys.
House,
we almost
which
done.
Is a big house, everyone. This
look
is
at
like
the house.
5 bedrooms.
Yeah, look at it.
3,000 square feet.
Look at it.
You can see the for sale sign right there.
Yes,
the
sir.
seller on this house has cut the price by 44%. It was originally listed for $550,000 a year and a half, 2 years ago. Now it's down to $325,000. And this was actually a flipper, everyone. They bought this house to flip it. It looks like they...
Hello, flippers. You buy, renovating flippers. Listen to this.
Finished maybe 70% of the renovations based off the interior pictures.
Look at that.
And I imagine they ran out of money and could no longer finish the flip.
Can't finish it.
And this is another thing I'm seeing a lot of down here in Atlanta.
So guys, this is very common when it comes to investors that buy and flip. In this type of economy, right, is because of the mortgage rates and the borrowers not being able to qualify because the DTI is too high or the income is not high enough to qualify for the mortgage. You're seeing a lot of discounts going on, and you're seeing a lot of investors, buying flippers or builders, run out of money to complete the renovation, guys. This is very common in this space. And you're seeing right there on the screen, right there, guys. This is Atlanta. Atlanta is a beautiful town. I mean, Atlanta has so much potential when it comes to new construction. I know because of the fact that I was investing in a town called Estelle, Georgia, up there, guys, and which is a suburb of Atlanta, right? It's so much potential up there, but because of the market and because a lot of investors actually acquired wrong, you're seeing a lot of this opportunity come up. Notice I said opportunity, not distress. Opportunity, because someone's trash can be your treasure with the right strategy to go in there and acquire right, guys. I mean, this is beautiful what is going on, not in the sense for when it comes to the sellers of the properties. I know it's kind of hard for them, but for investors that are looking to actually transform their entire family generations, now is the best time to buy real estate. Now, so guys, again, here is the free ebook, guys. Right here, we want to give this information away. You can scan on the QR code or click on the link below, and you'll be able to see it. And you can also DM me the word real estate. DM me the word real estate, guys. And what happened is my team will get you out there this exact same link that's actually on that QR code that is on your screen now. Just DM me the word real estate and we'll get it out to you guys. We're trying to get this information so you can begin to locate these properties in your city, county, and state, right? It's real simple, guys. It's not hard at all. All right, guys? It's not hard. This is the best time in history, in my opinion, to acquire real estate. What's good, y'all? LaDale Buggs here. Most individuals that I talk to today, they're really concerned about the economy, specifically the volatility of it. Number one, they're really concerned about inflation. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, the success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. All right, guys, now we're going to dive into a topic that is very important in this time frame, because we're in the heat of election season. I believe the election is in two and a half weeks, I believe. And there's a lot of appearances going on, specifically in the presidential election. There's a lot of debates going on from a congressional, senatorial, whether it be state, county, and federal standpoint. But today we're going to talk about the presidential election. Right now, you have Vice President Kamala Harris and President Donald Trump going back and forth when it comes to interviews concerning their policies now. And I thought it'd be wise for us to continue to walk through vetting the candidates, right, concerning this, because we're talking about money, right? And these policies can affect your investment strategy, no matter if you're a private equity investor, VC, or a real estate investor, right? Or an investor that just invests in stocks and bonds, mutual funds, which is fine. Someone's policy is very important for you to begin to unpack. So I thought it'd be wise for us to dive in to a side-by-side comparison done by a tax strategist on the Trump versus Kamala Harris tax policy comparison. We're going to talk about it all, guys, right? And we're going to go through it all. So let's dive in this real quick now so we can see what's going on. And I think you're going to enjoy all of this, guys. This is going to be really good. Let's get into this.
Today, I'm going to break down the most important tax proposals that both Trump and Kamala Harris have made. If you want to know how the presidential election could potentially impact your tax situation, this is going to be the video for you. Let's dive in. Tax issue number 1. capital gains taxes. Kamala Harris has made several proposals regarding capital gains taxes. The first one is that she wants to tax unrealized capital gains, but for the wealthy. The way that this tax would work is that families with over 100 million of wealth would owe an annual wealth tax of up to 25% that would include tax on unrealized capital gains. If you don't know what an unrealized capital gain is, it's a hypothetical profit that you could potentially make one day when you sell a capital asset in the future. They're called unrealized gains because they don't actually exist yet. So if Kamala Harris becomes president, then yes, you could potentially owe taxes on fictional profits. Welcome to Fantasyland. This proposal would only start out applying to the ultra wealthy, but many tax proposals that start out only applying to the wealthy end up applying to more and more people over time. So don't.
I want you to understand what he just said. Listen to what he just said, okay? Bring it on your brain. Let's keep going.
Think that your unrealized capital gains will never be taxed if you aren't ultra wealthy, because if they get this policy approved, they could very well one day move that policy from 100 million to $1 million. Kamala Harris also wants to raise the long-term capital gains rates from 20% to 28% for those making $1 million or more per year. As a part of this proposal, she would also raise the net investment income tax, or NIIT, from 3.8% to 5%. If this proposal became law, it would mean that the high earners would pay 33% on long-term capital gains, which would be the highest long-term capital gains tax rate since 1978 under the Jimmy Carter presidency. So if you're someone who likes to invest in real estate, stocks, bonds, even precious metals or cryptocurrency, there's a very good chance that you'll be forced to pay significantly higher capital gains tax rates if Kamala Harris is elected, and if you're somebody that's making over $1 million. Okay, what about Trump? What has Trump said about capital gains rates? So far, Trump has not made any major tax proposals for capital gains taxes. So we can assume that he plans to keep them the same as they are for now. This would mean that unrealized capital gains would not be taxed, and long-term capital gains would likely stay at 0, 15, and 20%, where they're at now. But tax issue number 2.
So right there, before we go to the corporate tax side, from a capital gains standpoint, it seems to be that Kamala Harris is talking about raising the capital gains and even including unrealized gains in her proposal, and also raising the capital gains as well also. And you see Donald Trump, there's no type of change at all, period. And so you be the judge. Whose policy is more pro-business and also pro-worker, right? Is it Kamala Harris's when it comes to raising taxes, or is it Donald Trump when it comes to doing nothing at all and keeping the exact same for capital gains? You be the judge. Let's go to corporate taxes.
Is corporate taxes. Kamala Harris wants to raise corporate income taxes from 21%, where they are now, to 28%. This means that if you have a corporation, then you could soon have to fork over an extra 7% of your profits to Uncle Sam if Kamala Harris is elected. There have been a number of celebrities, including Mark Cuban, that have come out and said that Kamala Harris is pro-business.
Really?
I don't know. What do you guys think? Forcing business owners to fork over an additional 7% of their profits doesn't actually scream pro-business to me. In fact, weighing business owners down with more taxes kind of screams the opposite. Let me know in the comments what you think. Donald Trump, on the other hand, has proposed lowering the corporate income tax rates from 21% to 20% and even down to 15% for companies that make their products in the United States.
Oh, wow.
Trump was also the one who pushed to lower the corporate tax rate down from 35% to 21% in the first place. This change became law in the Tax Cuts and Jobs Act of 2017, which was passed during his presidency. So if you own a business, or if you're thinking of starting one, you could potentially get to keep more of your profits if Trump is elected and his policies pass. Let's go to tax issue.
So when it comes to a corporate tax, from what Carlton's talking about, who is a tax strategist by trade, you see the difference when it comes to the corporate tax. Kamala's wanting to raise it. Trump is wanting to lower it. And he asked a logical question. He said, Mark Cuban is saying that Kamala Harris is pro-business, but he said, but if you look at a policy, it doesn't seem to be that way. And when it comes to Donald Trump and his policies, he seems to be more pro-business because of the unburdening of the tax liability, therefore lowering the taxes. What do you think? You be the judge. Now let's go over to the next tax issue.
Number 3, individual income tax rates.
Yes,
it is
sir.
important to note that the individual income tax cuts that were established through the Tax Cuts and Jobs Act of 2017, they're set to expire in 2025.
Yes,
this
sir.
means that unless Congress votes to extend them, individual income taxes are set to increase for everybody come 2025.
Wow.
Kamala Harris has announced that she does not plan to raise individual income taxes for people making less than $400,000 per year. However, she has expressed support for President Biden's fiscal year 2025 budget proposal, which proposes increasing the top individual tax rate from 37% to 39.6%. So there is a very good chance that Kamala could attempt to raise individual income taxes for high earners if she is elected. Trump, on the other hand, wants to prevent the Individual Tax Cuts and Jobs Act that he created from expiring. He wants to make them permanent so that tens and millions of Americans can continue to pay these lower tax rates that he established. Here's tax issue number 4.
So, from an individual standpoint, you have Kamala Harris saying that she doesn't really want to do anything to anyone that's making below $400,000, right? But you didn't see cause and breakdown in President Biden's fiscal year budget an increase in individual tax, right? And how she's kind of behind that, right? But then you look at Trump, of course, with his with the Tax Job Act that he actually passed. He wants to make those more permanent because he believes that it will benefit the Americans even more. So therefore, you can lock in those lower tax rates. Again, from a individual tax standpoint, who has the better policies when it comes to benefiting the individual? Is it Kamala Harris or Donald Trump? You be the judge. Let's go on to the next tax issue.
Taxes on tips. Kamala Harris proposed eliminating taxes on tips for hospitality and service workers. This could potentially have a tremendous tax reducing effect for tipped workers. I mean, think about how many tipped workers there are in the United States. Trump also supports eliminating taxes on tips. And in fact, he was the first one to propose this idea, and Kamala Harris copied the idea and proposed it several weeks after Trump proposed it. So if you happen to be a tipped worker, such as a busboy, maid, waiter, waitress, bartender, caddy, you know what I'm talking about.
Sure.
There's a very good chance that you could be saving a lot of money in taxes, regardless of who wins this election. If taxes on tips are eliminated, it could result in a sizable increase in demand for hospitality and service workers. It could also lead to changes in the way that employers decide to pay their employees, and some employers may choose to try to increase the portion of employee wages that come from tips compared to hourly pay from the employer. This could get interesting. Now, here's tax issue.
So on the no tax on tips, what he's saying is if whoever gets elected, if they move forward with this no tax on tips, this could hugely benefit the servers and attract more talent there, and also the restaurants as well, because the restaurants, I believe, pay a 7% tax on tips, because typically you write down your tip on the receipt. Well, that is paid. The restaurant owner pays 7% of that income tax there when it comes to that tax on tip, because it's classified as income, right? That would eliminate not only the tax for the server, but also that tax for the restaurant owner as well. So what he's saying is whoever is elected there, right, it can benefit hugely the hospitality industry. And he's right. Let's keep going.
Issue number 5, Social Security taxes. Kamala Harris has yet to announce any significant changes to Social Security taxes. Trump has announced that he wants to eliminate taxes on Social Security benefits. So if you happen to be disabled or elderly, you qualify for Social Security benefits, then you could soon not have to pay any more taxes on your Social Security benefits if Trump is elected and if this proposal becomes law. I never understood how we pay into Social Security and then later on in life, a percentage of our Social Security, depending on our income, is still taxed. Never made sense to me. So I like this proposal. Here's tax issue.
So when it comes to Social Security, guys, Kamala Harris, no change. Trump is talking about eliminating taxes on Social Security. I agree with Carlton. I didn't know that Social Security was even taxed. But that'll be huge for those that are receiving Social Security, which benefits the individual taxpayer. So on that policy, which one offers the better plan? Kamala Harris or Donald Trump? You be the judge.
Number 6, overtime pay. Kamala Harris has yet to make any tax proposals related to overtime pay.
Okay.
Donald Trump has proposed eliminating taxes on overtime pay.
Okay.
He made this proposal shortly after the debate with Kamala Harris and argued that eliminating taxes on overtime pay could help to incentivize people to work for longer hours, which would be beneficial to both themselves and to the companies that they work for. Love this one. Tax issue.
So overtime. Kamala Harris proposed nothing. Donald Trump is talking about eliminating the taxes on overtime. And we see that can benefit, as Carlton said, the individual and the company. And the incentive is to have workers work longer hours, right? Which is beneficial for the company and for the individual. On overtime, which one actually have the better policy? Kamala Harris or Donald Trump? You be the judge.
Number 7, tariffs. Kamala Harris has mostly been critical of tariffs and that they are effectively a sales tax on American households.
Sure.
Trump, on the other hand, has proposed placing a 10 to 20% baseline tariff on all goods imported into America and 60% on all goods imported from China. Speaking about his tariffs policy, he said other countries are going to finally, after 75 years, pay us back for all that we've done for the world, and the tariffs will be substantial. Trump has long been a proponent of tariffs, and he used them extensively during his presidency. Presumably, this is because they help to protect American companies, which are not subject to tariffs, and because they give him, as a president, more non-military negotiating power with other nations. This is key. In fact, Trump likes tariffs so much that he even reportedly floated the idea of replacing federal income taxes entirely with tariffs. Tariffs provided a massive portion of the tax revenue in America before both the IRS and income taxes existed. Before I break down the last point, make sure you sign up for my tax-free wealth challenge if you want to learn how to cut your tax bill by 50 to 100%, regardless of who wins this election. This link is in the description, and we kick off soon. Love to see you there. All right, tax issue number 8. The startup expense deduction. Kamala Harris wants to increase the startup expense deduction from $5,000 to $50,000. This means that people who are forming a new business would be able to write off a larger amount of the costs that go into forming a business. At first glance, this might look like it's extremely beneficial for business owners. However, we have to keep in mind that she also wants to raise corporate taxes by 7%. So yes, this would make it easier for many people to start a business. But once your business becomes successful, Kamala will come for a huge percentage of your profits through corporate tax hikes. Trump has not made any tax proposals regarding startup expenses. Now, it's time to answer a question about Kamala's tax plan from a...
So, hold on one second, guys. I like how you broke that down. Let me go to tariffs real fast because I didn't see anything about tariffs. I like the perspective that he talked about when it came to Trump and the tariffs, so to speak. And he's gonna break that down a little bit more concerning tariffs. But I like how you said that Trump was using tariffs as a negotiating tactic, which is a non-military action that he has at his disposal, and how Trump has floated out there that he would like to potentially even eliminate the income tax, right, and replace it with tariff income, right? I understand the rationale there. I am going to need for Trump to go a little bit deeper on what that will look like, because he has been very vocal about he loves tariffs, right? And Kamala Harris has been very vocal about she doesn't like tariffs. I've spoken about tariffs on a variety of platforms concerning how tariffs can raise the cost on some goods. It can, but I like the negotiation strategy of tariffs, right, that Trump's talking about, how it protects companies. But I'll go into that a little bit later on, guys. But from what he presented, you let me know when it comes to tariffs, or you side with more with Kamala Harris, right, or more with Donald Trump when it comes to tariffs. And he talked about I believe he talked about the startup deduction. I like how you broke down how the deduction for starting a business does sound good from Kamala Harris, but I love how you balanced it out and said that, hey, as your company gets more successful, Kamala Harris's plan does come for more of your profits because you're more successful. So yes, up front you get some leeway, but don't get it twisted. Under her plan, you're going to pay more on that one, right? So again, do you agree with that policy? Yes or no? Let's keep going.
Subscriber on my YouTube channel. This question was asked on one of my recent videos called Tax Expert Breaks Down Kamala Harris's Tax Plan video. If you haven't seen that one yet, what are you doing? Go click on that video. I broke that one down. It's pretty awesome. But the question which came in from Mall Mason 9834 was, can you claim unrealized capital losses under this plan?
Yes, sir.
And the answer is Kamala Harris has done very few interviews where she elaborates on her tax proposals in depth. But as far as we can tell right now, her wealth tax proposal only includes taxes on unrealized capital gains and does not include tax refunds or deductions for unrealized capital losses, which honestly seems a little unfair to me. Now, I know this election is coming up right around the corner, so I hope that this video will help to give you some more insight that can help you understand where each candidate stands on critical.
So again, guys, phenomenal breakdown from Carlton. Follow him, guys. If you don't know who he is, follow him. He's brilliant at what he does, guys. Phenomenal what he does. I believe that it was fair and it was balanced. That's what it was. So again, follow him, and he realistically does a great job of presenting both cases from a fair and balanced standpoint. Now, guys, let me give you my thoughts on this as well. Okay, he went through issue by issue by issue by issue, right? And when it comes to this comparison from Kamala Harris and Donald Trump, I see a kind of a commonality when it comes to this tax comparison, right? Kamala Harris's plan more so is the raising of taxes, right? Raising of taxes. Trump's plan seems to be more of a lowering of taxes. Typically, when you raise taxes, right, what actually happens is you raise taxes, which increases the size of the government and or the administrative state, right? Because when you raise taxes, it becomes more of a burden on the consumer, and the consumer needs some assistance to bridge that gap. And typically, the government steps in to get that accomplished. But by them stepping in, another variable comes up, which is inflation that most Americans don't plan for. So if you're okay with that, you're going to side with Kamala Harris. On Donald Trump's side, his tends to be more of a slashing of taxes, lowering of taxes to make it more, because he believes that that's more beneficial to the economy, which benefits the consumer and the companies, right? Because it lessens the burden in a high inflationary type of economy that we're in now. His theory or his ideology is, if I lower the burden of taxes on the Americans, right, that lessens the burden because of we're in the high inflationary tax standpoint, and lessens the burden on the company as well. The company can then keep more of their profits, which they can then reinvest in scaling the business, which is what we normally do in the first place. But when we have more at our disposal, we can invest more and get a higher return on our investment, which is normal when it comes to business practices. That's great for the consumer and the worker, because the consumer gets a higher paying wage, which they love that as well. Which means that they can go out and buy a house, a better car, put their children in better schools. You see what I'm saying? And it works well for the government, because the government begins to make more revenue when it comes to a property tax standpoint, a sales tax standpoint, a payroll tax standpoint, a corporate tax standpoint, because of the reinvesting of those dollars. So it benefits everybody when it comes to Trump's side of the issue when it comes to taxes. And so, again, I asked the question. You've seen a very balanced perspective on taxes. Which one do you side more with? Kamala Harris or Donald Trump? Well, this November, this is election season. You get to make that decision on which policy best benefits you and your family. All right, guys, I hope now, let me give you my thoughts on the housing situation, right? As you guys have saw, right? And he used Georgia. He even mentioned Texas, Florida, South Carolina, North Carolina, and Tennessee because of the hurricane, a lot of people on the retail side are exiting the state of Florida, which is already highly inflated, specifically in the Miami area, right? From a rental standpoint and a sales price standpoint. And people are leaving because of the hurricane. Now, those that are veterans in Florida, they understand how Florida works. So this is nothing new to them. But, which is fine, what's happening is you're seeing in Georgia, Tennessee, South Carolina, North Carolina, you're seeing the slashing of these cost of the price point for those properties, because ain't nobody buying, because people's DTI is too high and they don't make enough money because the inflation's outpacing their wages, which I told everybody was going to happen. But I love how you unpacked the bond market, how the bond market really controls the interest rates. And you saw, even after the Fed cut, as I've been saying for a long period of time, is the rates, even after the Fed cut, went back up. So again, guys, look at the fruits, not what someone is telling you. Even that my name is not Jesus Christ. I'm a servant of his, but I don't know everything. Vet me. I am open to being corrected. I am not committed at all to my ideology at all, as far as when it comes to being right. I want to be wise, not right. Does that make some sense here, guys? And there's some investors. I know a good friend of mine who's a great flipper. He's making money flipping properties. It's because he bought correctly. He bought right. You make money when you acquire the real estate, okay? Not when you sell it, when you buy it. If you buy it right, you won't lose. It's extremely simple, guys. This is the reason why, guys. Again, if you want to download the free ebook, Distressed Property Investing, click on this QR code right here, or you can also go down below in the description and click on the link. It's right there, guys, to download that free ebook. It's completely free. Don't want no money from you at all. People want to get the information out to you so we can potentially joint venture partner with you and fund your deal for you. If we can teach you how to find the deal, vet the deal, to make sure it's the right deal, structure the right way, I will fund your deal for you. We can profit split. No problem. My goal is to be a mentor to individuals that may not have mentors at all. So again, scan on the QR code or click on the link below. And also, guys, if you don't have the ability to do that at all, because you may be driving, it's okay. No problem with it at all. No matter what platform that you're really on, DM me the word real estate, and this exact same link my team will get out to you so you can download this free ebook. Real simple, guys. Now, also, guys, a lot of individuals ask me this question. They say, LaDale, I really don't want to invest in real estate. I'm really looking to begin a side hustle. No problem with it at all, guys. Man, hey, we have something for you as well. It's called the Passive Income Blueprint. A good friend of mine, Matt Sapala, did a free presentation. It's free again, guys, for you to learn the top 3 strategies that you can begin to generate really about $1.5 million worth of passive income. Passive, not commission, right? Passive, right? Real simple for you to realistically do. It's free. And guys, he actually does a case study on your partner, baby, which is pretty cool. It's free, guys. Again, scan on this QR code or go down below in the description and click on the link. Again, it's free. Don't want nothing for you at all. Our whole thing is to give you value and add any value to you guys by giving you information. It's real simple, guys. Or if you want this link, guys, you can also DM me the word passive income. Passive income. DM me that word, guys, and we get it out to you. No problem with it all. The same link that's on the QR code and the link below, guys. And also, guys, man, I'm asked all the time, man, concerning the merch, baby. You see that thing, baby. We would call it the I Got That Bag University merch, guys. Hey, baby, don't get mad because I look better than you. Just take the damn picture for your mama, them guys. Go down below, guys, and get your merch, baby, and show everybody how you got your diploma. Again, you can scan on the QR code or click on the link below, guys, to get your merch, guys. It's real simple, guys. Come flex with your partner while you go get the bag, guys. All right, man. Well, man, thank you so much for your time. I hope and pray we gave you some value, guys. Please give me your thoughts. Let me know what you think about what's going on. If you agree or disagree, it's all good, baby. It's all in love here. But you know how I end it every single time. Before you leave and while you can, you see that thing, baby. Take that damn picture and give it to your mom and them and holler at your partner. God bless you guys. See you next time, next Friday at 5 p.m. Peace. Man, let's keep it 1,000. You are concerned about what's going on with this economy. I know I would be, man. You have the stock market not doing too well. You have inflation outpacing wages right now. And you have major companies looking at laying off a lot of people. Man, I had a friend of mine whose wife works for a major pharmaceutical company, and they're talking about laying off scientists, man. Scientists. It's getting real out there, guys. But hold on, wait a minute. It's not the end of the world for those that actually have a counter move. More than ever, it's time for everyday Americans to begin looking at a side hustle, a business for them to begin building now, and for them to be able to have the ability to pass the business on to second and third generation. Now, what business model is best for you? That's a great question, and the only person that can answer that question is you. The good news is a good friend of mine, Matt Sapala, actually did a good presentation on presenting the passive income blueprint. 3 effective ways to generate $1.5 million in passive income. The most powerful word in business is cash flow. And even a more powerful word is passive cash flow. I know, because I've been able to live the life of my dreams because of passive income. Most individuals focus on commission-based, generating commission. What if you can actually generate $1.5 million in passive income that can change not only your life, but generations to come, guys? Click on the link below or swipe up, guys, and I think you'll be blessed with what you see. God bless you. See you on the other side.